Trading 360. I'm Nicole Petallides. We're live on the floor of the New York Stock Exchange. The Dow's up 244 points, and it's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades right here on set, Jessica Inskip, stockbrokers.com. Great to see you both. Thank you for being here. Jessica, first maybe a market thought, because, I mean, we wake up in the morning, we see a sell-off, we're up 3 or 4 days, finally thinking there may be a bounce back, but there's volatility.
Yes.
That's what it is, right?
So the theme is volatility, but I think the theme beyond that is uncertainty in so many levels. So uncertainty with what's happening with tariffs and trade policy, and uncertainty perhaps with the Fed, but we got a lot more clarity yesterday, and I think the markets really liked that. I thought it was interesting with the dot plot, keeping it exactly the same,
right?
Calling tariffs perhaps transitory, taking out any fears of stagflation is the way that I interpret it, and that there's a toolbox that the Fed has if something does go awry, but it's not just trade policy that they're concerned with, it's immigration, it's other things, and it's the net effect of that. But on top of that uncertainty, we're getting the soft data, but soft data is as in inflation expectations, low consumer sentiment, but the hard data is actually not that bad.
So that's good. I mean, and that's what we heard from Bank of America yesterday, too. They were talking about the economy not being as bad as people thought. The projections were inflation higher, growth lower. I never thought I would hear Jay Powell say the word transitory ever again.
I agree.
He said it, I literally had a gulp in my throat.
Same.
But, you know, that's the word. That's the word they use. So there you have it. Anyhow, let's talk about some names that you're watching here. And, you know, as we see energy here at 68.28 for the barrel for oil, you're watching Duke Energy, DUK. Some of your thoughts there?
Yeah, so I still wanted to come with something that's a little more stable, long-term dividend. I like the energy play because it was really battered down, and perhaps we could have a comeback. It's got a 3.5% dividend yield, but it has exposure to nuclear energy, and that could certainly be positive in the long term for this security. We've talked about nuclear energy and how that does go into the AI narrative, the older infrastructure, all of this investment domestically that would need to be done to have this nuclear feeder or clean energy solutions. And they've got a really good, strong growth outlook in comparison to their peers. And on top of that, the way this was flagged today was actually through one of my technical scans, which is where I run a turnover from the 13 and 26 weekly moving averages, which tells me 1 quarter of prices is getting better than 2 quarters of prices, which is usually when something bottoms and starts in this bullish trend.
All right, so that's a good sign. I mean, this is a name that has run up, has hit a recent high of 121, 1 year up 26%, and a dividend payer. Rick Ducat, I know you've been looking at all of those. Let's see what Rick says about the chart. Rick.
Perhaps at a glance, maybe not the most exciting name you might think of, but it's a really nice chart for a bullish setup here. We're up 29% off our 52-week lows. We topped out right around here previously, this red line near 121. That was around the October months. We had a bit of a decline. From there, we established what looked like a supportive area here at this green line near 110. But ultimately, we found a bit of a stability near 105 after a dip below our purple 252-day EMA, but this was about where we righted the ship. We're above our shorter-term moving averages once again here, and we are touching against those old highs near 121. So we can see as well another interesting aspect of this chart is RSI, our measure of momentum, is contracting in an increasingly narrowing triangular shape here, a suggestion of low volatility, which is often a precursor to high volatility when one of these breakout points are eventually breached. It triggers the cascade of orders. That's how you get the big breakout scenario, or so you would hope if you were bullish. Certainly doesn't always work out that way, but that's the kind of setup many people try to look for. So if we were to keep moving higher, we would see our +1 standard deviation channel comes in near about 126 or so. That would be 1 standard deviation above our blue linear regression line, our line of best fit based on closing prices. To the downside, we've got our 21-day EMA, we've got our trend line, and then volume starts to pick up again according to this node near about 117, 116. That general area could be supportive, Nicole.
Okay, thank you for that. I appreciate it. And it's interesting, as you're showing there in some of the record levels that we've seen this stock, I mean, hit record highs, not just a 52-week high, but many of the analysts have price targets that are at or around the current price, 121, 121. JP Morgan has 121, BMO has 128. So it's not like they see a ton of upside, but this one you're thinking a long-term thing too, right?
Yeah, longer-term upside potential, but what's great when we find these neutral type of securities is a dividend play. We're in this more for not necessarily capital appreciation, but adding some income, smoothing out that volatility, get some cash on the sidelines when we find a bottom we can deploy.
All right, if you have a Coke and a smile, everybody loves a good Coca-Cola. The stock year to date is up about 11%. It's had sort of a roller coaster throughout the year. Some of your thoughts on this name?
Yeah, just wanted to pull a consumer staples name. And again, this showed up on the technical scan as well. A lot of those did, which I found very, very interesting. Steady dividend and cash flow. Theirs is around 3%, but they also have a global exposure, and I think that's important when we're considering the current environment, over 200 countries. And there's this trend where it's less alcohol consumption and more bubbly drinks that have some type of health benefit, which aren't necessarily Coca-Cola, but Coca-Cola offers more than Coca-Cola. So therefore, I think it's a great play where we can smooth out that volatility within your overall portfolio, add some dividend, get some cash that we can deploy.
Yeah, I mean, I saw that competitor Pepsi recently acquired Poppy, the probiotic, fizzy drink, but they have a slew of things under the Coca-Cola brand. I mean, not just the sodas and zero, but they also have grapefruit juice and all kinds of things. Schweppes, Fresca, that's a great one.
Absolutely.
Dasani and more. Let's see, Rick Ducat, your thoughts?
Yeah, pretty much just all drinks. That's the big difference between Coke and Pepsi as companies. Pepsi's much more of the snack foods here. But we can see that now we have sort of a similar setup to our last chart, but this one maybe not quite as strong, though. We tested these old highs that we established here near 73 once again recently, but a little bit of a breakdown here. Not anything severe by any means. For the most part, we are struggling to retake our yellow 21-day exponential moving average near about 69.53. That roughly represents as well a point of highs and lows that we established for our price action near 70. So a push above 69.50 to 70 would be what the bulls would want to see. But you can also look and we backtrack a little bit with me. We had a downward sloping trend line that was pretty resoundingly broken when we had our earnings surge to the upside here that helped propel us further. Never even really come close to testing those post gap up lows near 66.41. So that's something to consider. If we do move lower, that would be a key supportive area to keep in mind. A little bit of bearish divergence as we made those highs, but nothing goes up forever. Things have got to slow down at some point here. What the bulls would probably want to be looking for would be some type of bull flag, bull pennant type of behavior here. We had our big gap up. We had a continuation. Now we're having a little bit of consolidation slash downtrend. So that would be kind of the hope for a bullish trader in this scenario. If we were to look at our volume profile and standard deviation channel studies once again, we can see volume node lines up with our +1 channel near about 72. So that seems like a decent point to consider to the upside. We're in the thick of another smaller volume node right around here that lines up with our 21 EMA. And to the downside, like I said, though, those post gap up highs near 66.41 will be key.
All right, thank you for that, Rick. And you're right? One's more snacks, one is more drinks, and that's that. Let's take a look here at Nvidia. I already have Nvidia up, so my mind's on Nvidia, guys, because this one everybody holds it some way, shape, or form in an index. If you're not a Mag 7 person, but really it hit a high, it sold off. Some of these names are down 10, 15, 20, 30%. So 153 was the high. Your thoughts on Nvidia today? I'm glad you brought us this.
Yeah, I thought it was important to talk about, especially after the event yesterday.
Yeah, we had the GTC conference. Sorry to interrupt. Yes.
Oh, yeah, absolutely. What I think is important, if we take a step back to the sell-off, since it is a big component of the market and we have a lot of retail participation, and we even saw the unwind, if you remember the yen carry trade, which is actually very ironic. We're at some same levels that we were at that at that time on the broader S&P 500. Nonetheless, I digress. Because of that, it's a big component of the market. There's triggering of margin calls, and that's inclusive on the retail side, which is about 53% of the market participation, which means it's a drastic sell-off that could be systematic just to raise cash rather than fundamentally driven. That brings me to GTC. I am still a big proponent of Nvidia. Nvidia, it's more than just chips, and we saw this from GTC. We even saw this from the previous event in Vegas where you had the keynote. My big concern was, is this just chips? That's Wall Street's concern. Where is the demand going to come from? That's not the case with Nvidia.
Right.
It actually created a moat with CUDA around it. So think about this. I'll use Tesla for example, needs Nvidia chips for autonomous driving. On top of that, it needs a layer of software in order to train it that's consistently there. Nvidia provides that. It needs training and inference models. Nvidia provides that. Essentially, Nvidia is creating this AI ecosystem with the AI for everything, where it's becoming an end-to-end solution. And that's the goal, which is a longer-term goal, which means there's volatility if something puts, the market tends to look at things quarterly. However, I think it's a wonderful buying opportunity right now because of that, hopefully, compounding investment thesis we just
I mean, you think we see that, and I understand what you're saying, because I've been hearing a lot about that NVIDIA is just more than just a chip. It's its whole model, the AI ecosystem, as you apropos. That was very well put. The 153, you think we'll see that 153 again? I mean, how long does it take to get back to highs?
Yeah, I think we will. I think what the Wall Street wants to see is another company saying, I have revenue, because it's not enough that NVIDIA is consistently meeting expectations.
Right.
They want to see somebody else benefiting from NVIDIA, which is so difficult, and that doesn't even make sense saying it out loud, but that's what it seems like Wall Street's looking for.
And we heard that deal yesterday with General Motors,
yes,
too.
Exactly.
Actually, we heard it 2 days ago. Rick, your thoughts?
I guess my comment, just kind of piggybacking off Jessica, is, these AI companies, even if new AIs need less chips, they still need a ton of chips, they still need a ton of hardware, they still need all kinds of supplies. So it seems like long-term the prospects are pretty good for this field. Now, if we were to consider, just based on the demand situation here, just referring to that, but if we were to consider our chart here, we can see that for the most part, we had an uptrend here, moving higher and higher, gradually increasing our lows. We did bottom out here near our purple 252-day EMA. That's when we started running into some trouble. We had our highs near 153, subsequently lower and lower highs. We saw momentum trending downward. Now we are sandwiched between our purple 252-day EMA and our yellow 21-day EMA. So some kind of mixed pictures here, because we are not breaking above our 21-day EMA, but we are potentially pushing out of our shorter term white downward sloping trend lines here. So what the bulls would want would be a big push above these resistance levels and to reestablish some traction above this red line, 130, highs, lows, 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 low point again there in consolidation after a retest here. But that would be another breakout point that the bulls would want to retake. So if we were to assess our other key levels based on our other studies, once again, we are right in the thick of a volume node here near about 120. So based on our other technical indicators, right about where we are now looks pretty important to hold. If we do move to the upside, we take out that 130 level. The next volume node that stands out to me near about 140, and then we have our gap low and our subsequent high where we retested that area near about 142, Nicole.
All right, thank you for that. And showing the higher volume now as we're getting to lower levels and people stepping in and trading and buying and such. So Jessica, final thoughts. I know your podcast has been doing really well.
Yeah.
Maybe you've had some themes or questions that you've been sort of getting into. Final thoughts?
Yeah, absolutely. Well, we have been discussing actually the difference between soft data and hard data, consumer sentiment, and how that's exacerbated, because the most dangerous market mood is euphoria, and then we get caught off guard by a swell of risks, which I argue has already occurred. And now we need to consider counterbalances if there is slow growth. We're also trying to tame inflation, which if there is slower growth, companies can't attribute costs or pass them over to customers as much, and we don't know how that math is going to work out just yet.
Right.
And that could be, there are counterbalances in play as well.
Right. Yeah, good point. So we'll continue to take a look at the differences between those pieces of data. What's the name of the podcast?
Market Make Her.
Okay,
Yeah,
great.
thank
Jessica Inskip of stockbrokers.com. Thank you for being here. Our own Rick Ducat there on the charts for Duke and Coca-Cola and Nvidia on the big three today. Thank you.